Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show where we look at what happened in the week in the markets and what we can learn from it and how we can plan for a better trade for the next day. This is analysis for November 7th, Monday, in the upcoming week, and let's get into the charts without wasting time. This is the Nifty and the Banknifty charts for the weekly that you see here. Clear gap up and a wide range bullish candle is what you see on the Nifty on the left side. But look at Banknifty, highly volatile and finally ending up as an indecisive dodgy candle, small body, indecisive with equal size wicks on both sides, indicating the big fight between the bulls and the bears that happen in the banking index. Right, that's what we are. So if you look at this is a trend line where the price levels has been tested multiple times on the Nifty and 4 or 5 times in the Banknifty as well. And look at where we are. The Nifty is already broken out from that trend line resistance and trying to take out the next swing high. But Banknifty seems to be taking its own sweet time. The second week of consolidation that we are seeing there. Last week it had hit the resistance and then did a minor pullback. This time it attempted to break it again and then gave up and then finally ended up indecisive. That's why we are. Look at this daily charts, this short-term charts of the Nifty. On the left side, you're seeing that last week was more like a inverted V and another V, very highly volatile. Right? We had multiple gap ups, gap downs, everything. It gapped up, hit the ceiling, gap down, then reversed, and finally settled. Not too much of move on the downside, and full recovery has happened, and finally ending up less than 2% of up more. Bank Nifty on the other hand, look at what is happening. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days it's doing nothing but staying where it is. It's clear zigzag consolidation sideways movement that is very much visible, even though there is small gains that makes in between. For the last 9 days it has been doing nothing much, and it moves up above the 41,600, 700, then goes down 1,000 points and then again climbs back, but it is range bound, right, in the short term. Let's look at the numbers. What we gained 300 points in a week, less than 2% on Nifty, in the wide range bullish candle definitely after it had made a bounce up. Still above the 20 weekly moving average and is broken out of the trend line resistance. Bank Nifty on the other hand has gained 265 similar points but 0.65%, right? Less than 1% of more gain has happened in the Bank Nifty also, but finally after the violent volatile moves with high wick size, it has ended up as dodgy and still closing above the 20 weekly moving average, and does not succeeded to break out of the trend line resisting rounding pattern neckline. And daily time frame short term, as we have seen, it's a 64 points gain on Friday on the Nifty, and the price is much above 20 DEMA. Bank Nifty also is much above DEMA. It's a small spinning top kind of formation that has happened. Bullish candle on the daily time frame on the Nifty, but it is a small body candle with flat moves. Just 40 points lost in the Bank Nifty, but more still above 20 DEMA. Looking at the Bollinger Bands, we see that it's expansion on the upside. That there is consolidation happening, still the bands are moving up. That indicates that further up move can be expected. The breakout could be on the upside, unless and until you see a downside contraction that is happening, which is not seen. It's an expansion of the upside clearly, but much above the 20 EMA. So bullish bias expansion of the upside was what the Bollinger Bands are talking about. Looking at the levels, see the breakout. Right? The first resistance above would be 18,178, 75, 79, 18179 is first resistance take, and above that it would be definitely the previous high of 18,351. I'm sorry that it does not come here clear. So 18,351 is the resistance on the upside. After that is 18,600. It's all-time high level. So first 18,200 levels, then 18,350 levels, and then 18,600 levels. That's how the resistance that's seen on the weekly basis. That show, well, the chart is shown on the daily. So similar, the supports previous swing high is 17,992, and then after that we have a gap previous swing low, which is 17,834 levels, and after that 17,642. So these are all support resistance seen on Nifty. Bank Nifty similarly you can see it has been consolidating, and the 41,500 above close will be a first resistance, then 41,677, then 41,840, then 42,000 counting number. These are resistance on the upside downside. 4,700 would be this previous swing low nearby, then 40,508. Then you have the gap at 40,208 levels. So that's the support resistance on the Bank Nifty that's seen for the upcoming week. Moving on, momentum and trend. What you see on the left side is Nifty, right side is Bank Nifty. Left side weekly charts are showing that the momentum is the bullish zones, and the daily time frame is also showing that the momentum is on the bullish zones. While Bank Nifty has also climbed the bullish zones on the weekly and maintains that bullishness in the daily short-term time frames also in the Bank Nifty. But looking at the ADX, ADX is a trend indicator. It's bullish on all time frames on both indices. That means Nifty, Bank Nifty both are having bullish trends. But the thing is, Bank Nifty is having small weakness in the weekly this thing, weakness in the strength, but still bullish, right? So that's about the momentum and the trend indicators. Look at the volatility. There is a small dip of 2% today, and it has fallen much and close below the 15.65. But it doesn't take too much of a time to spike back now that it has slipped substantially from the 22 to 15.5. Anytime it could rise, so you have to be cautious about that. The global cues and uncertainties are still there. Remember that. Right, but it's good that the weeks has cooled off, and good for the markets, especially those who are trading in the options and derivatives. Open interest data, if you see the futures, it has a long build up on the Bank Nifty, but it has had a short build up. Bank Nifty showing some kind of consolidation, indecisiveness, volatility, and all of these, and then yet to break out. So it's a short build up in the futures, so is also showing some bearishness there, but Nifty definitely breaking out and long build up, very evident. It's just when the Bank Nifty also, if it joins, then it's going to be violent, and if the Bank Nifty face resistance and fall down, it would mean that a fake breakout has happened with Nifty, right? So number 10, the weekly expiry showing that the put call ratio is also very close to bullishness, 0.93 and 0.85 Nifty and Bank Nifty. Not yet bullish, but almost there. That's the volatility and open interest. So levels for the next week, the options for the expiry number 10 is showing a very interesting charts, right? Look at where the supports are. The highest number of put writing is seen as 18,000. Then the highest number of put writing after that it is seen at 18,100. Look at the resistance. The highest resistance is at 19,000. Right? That's 1,000. Very close to 900 points of up move from here. The second highest put call writing is seen at 18,000. So it's very different kind of build up that has happened. There is a very wide range. Big moves can be expected in the next week, is what the option writers are thinking. And 41,000 is where the highest put rating is at. 41,500 is where the highest call rating is at. Second highest call rating is at 43,500. Very wide range. And second highest put rating is at 40,500, where the option writers are seeing the supports. Right, long build up and short build up is contrary, and that's what is seen in the Nifty and the Bank respectively, while the put call ratios are very close to bullishness, as we have seen. So that's what the options are saying. So it's not giving a very conclusive build up. Next week is a truncated week, or as well Tuesday is a holiday, so decays may happen very quick on Wednesday, most likely. So option writers have put in and are looking at very high volatile, very wide range, right? But bullishness is what projects outside. All the Bank Nifty shows some volatility on the Friday's build. Moving on to see the sectorial performance last week, IT sectors, all the sectors have moved up. Look at this, IT 1.5%, metals are rocking in 7.5%. That's the sector of the week last week, 7.5% of up move. And auto is up slightly, it is kind of flat, auto, but it is definitely positive green. Pharma has also made good moves, so 3% FMCG up, 1.3%, not 0.5%. Reality sector also, so all the sectors has moved up last week, especially the metal sector. And what's bullish is metal. Metal is bullish on both time frames, weekly and daily, and then long positions could be taken here. And auto sector also is the bullish on both time frames, and stock pickups can be done in this as well. Well, farmer is that to catch up on the medium term momentum. It's still sideways, you'll have to wait. And trust others also, you'll have to wait till the momentum catches up. Somehow FMCG reality all have sideways momentum. IT everything. So metal auto is doing good. Those are the stocks which are rocking, and pharma is also catching up. FMCG also is catching up. These are all catching up, right? That's how the success is placed from the momentum perspective. And that's what I see. IT sector is bouncing up and then hit resistance, some pullback, right? Inverted hammer formation, momentum climbing sideways. Metal has broken out from the resistance and closed above that. It is bullishness is seen. This is 7% more that you see. Momentum also is in the bull zones. Trend is the bull zones. Right? We'll have to see if the price is managing to move above and hit the next all-time high levels or not. So metal had given up a lot and recovered beautifully. And last week was a big breakout from the metal sector, turning it into the bull zones. Now here that you see is auto. Auto is also attempting to make a new all-time high. It failed and formed an inverted hammer. Inverted hammer on the top of the trend is an indication of a further downside move, and there is a bearish divergence also seen on the momentum of the weekly charts. So you have to be cautious, but definitely bullishness is seen in the charts. But momentum divergence indicates that there can be pullback, and also the inverted hammer on the top could mean some trend reverse that can happen in the auto cycle. So be cautious on that. Pharma is hit resistance and then pull back. It is a channel breakout that has happened. We'll have to see whether it's able to take out and close above this resistance on. But momentum is still in sideways, yet to climb in the bullish zones. FMCG is a clear bullish breakout. It has been maintaining the momentum support above the RSI 60, and last week also was green. But remember, there is a divergence in the bearish momentum divergence that is seen here as well, just like the auto, but not that evident, right? But FMCG, all the charts are bullish. You have to be cautious on the divergence aspect, right? Reality the sector, it is taking a CIP bounce up move, and last 3 weeks it has been green, and it has still not climbed to the bullish zone, so it is still sideways. And the neckline is that cup and handle breakout. That neckline seems to be holding good for a long time. And also you have to keep a close watch, but momentum is still not bullish at all medium term, so let's wait on that. So it's heavyweights. HDFC Bank is not at climbed in the bullish zones. A big resistance on the upside, but a green close after a big attempt to move up is what you see. There is a result of something that is coming, but trend is rising up. But sideways, you'll have to wait for the medium term. HDFC has managed to close above the support. For the resistance, it has attempted to climb, but the momentum is still in the sideways zone. It is set to catch up. But Reliance also made a big reversal to the channel top, and it's still in the sideways. So these three majors, HDFC, Twins, and the Reliance, is yet to climb into the bullish zones. Right? IT stocks, how they performed is the channel top, and it hit resistance. There's a gap resistance also on the INFI. And TCS also has got a resistance there, so all are showing the big sizes, which shows profit booking and resistance on the upside. Momentum is still in the sideways, but good reversal from the channel bottom on both the indices is what you see. TCS did not even go to the channel bottom, but instead found support at the price level in the median charts and climb. So sideways momentum, let to wait long before this resistance on the gap resistance previously made by the Infosys for it to move further up. ICICI Bank managed to maintain the bullishness on the RSI 60 on the support, but now there is a bearish divergence which could be fatal. Right? There is a bearish downturn divergence where the price is moving up and the momentum is moving down. So the price could take. Also, you had a weekly close that is formed a bearish candle. So cautious on that, but otherwise, the charts are showing that it's in the bull zones, continuing to be bullish zones. Kodak Bank also has hit a resistance zone and formed like Davestone Doji, sideways momentum. Trend is also flat, right? So that's a zigzag moment of consolidation that has been happening in the Kodak Bank for long. Now it has reached the top. Now we'll have to see whether it's able to climb up above that or not, because it has hit the same place multiple times earlier in 2022 itself, 3-4 times, and failed, and this could be another downfall at least to the support zones downside. So momentum is sideways. That's Kodak Bank. So in short, it's the ICICI Bank is only stock that is seen to be performing. Others are all sideways. Momentum yet to catch up. Reversal has also hit resistance, right? So several stocks are at resistance also. Only after it has given a clear indication breakout can be getting. But ICICI remains to be in the bull zones. Institutional participation by Fyers are buying 10,300 crores of buying has happened last week. That's very positive. Years of profit booked 4,500 crores of selling. The net longs in the FIDs moved up last week. Right? It's on longs are moved up. So that's also a positive bullishness is what is indicated of the institutional support will be high. Right. Looking at the global markets and the currencies and commodities and all that, dollar index chart is what you see on the top. The dollar index has given a pullback in the last 3-4 weeks, and remember it has made all-time high levels of 113 plus. Oh, dollar index is on the downside chart. I'm sorry. You're talking about dollar index, the chart is downside. So remember the trend line is there, drop out there. It's a gravestone doji, which is indecisiveness and selling pressure. Some pullback has happened the last couple of weeks, and remember we have a bullish positive reverse divergence that is there, and it could bounce up and go back to the all-time high, or not the all-time high, the 2-decade high. You can go back to the 120, 115 kind of levels once again is what it again. But right now it seems okay. It has been consolidating. Some pullback has happened on the US dollar index, but on the top of the chart where we have the USD and our currency pair also, there is some pullback that is seen, but at the same time there is a potential unconfirmed positive reverse divergence which could spike up the price again to make a new all-time high. But as of now, it seems so close below the 82, which is positive. Right. So some pullback, some relief, but remember that pullback does not mean that the momentum has cooled off. It is still in the bull zones. Anytime it can spike up back. Right. Use markets. That's very interesting. Last week we took what you see here is the Dow Jones charts and the Nasdaq charts and the S&P 500 chart on the bottom. Look at this. What has happened? Very positively, the Dow Jones had hit the top of the channel and then faced resistance and formed a hammer pattern on the top of a rally. This could indicate that there is a reversal that could happen to the channel bottom or at least to the support zones. US 100, that's Nasdaq charts were not as nice as positive as the Dow Jones is showing. It could not even bounce for the last decent bounce also did not happen. It did not even go up to the channel top. And look at the week, the bearish wide range bearish candle is what has formed last week. It has managed to just hang on to this sideways zone before it is falling into the bearish zones from the momentum perspective. So it is showing very weak Nasdaq charts, and the S&P 500 also it is showing a reversal before even hitting the resistance of the channel top. But all are maintaining almost the sideways zones. But Nasdaq is strong, but you'll have to see whether Nasdaq could be able to take out this resistance zone on the upside and then move from that. But as of now, it is in a reversal mode. Indication of reversal to the downside is what it indicates after having made a rally of 3-4 weeks in the US market. That's going to give more trouble. Along with this, look at this, the crude oil which is cooling off below the 90 is 91.8 at now, and remember it is at a major support zone, and there is every chance that it can go up to this 110 plus levels where the channel top is. That's possible. It was showing some cool off 2 weeks back, but that's over now. It has climbed back above the 90, which is not good. Adding this with the dollar spike and the US markets crashing will give you big trouble for our markets. That's something we have to be very cautious. Look at gold. Gold has managed to climb back in the support zone from where it had slipped down, and momentum also has managed to be the sideways zones now, although the trend is in the bear zones. Right. So commodities are not in good shape for with the dollar rising and the gold, having given up the major support zones and all that. The US markets, right, is what you have to keep a close watch on the pre-market next in the beginning of the next week and every day. Big moves are coming, then we have to be cautious. Stock Mix 2, State Bank of India, the National Bank of India, the largest bank, and it is a rounding metal breakout. Some pullback up and handle. Pullback had happened. It has found this at major support zone. It has bounced up, and price has negated the various divergence also. It is it is got good swing opportunities on the upside. Similarly, Indian Rail, catering and tour operating company, Indian Railways company IRCTC is showing a rounding pattern breakout possibility. Although you'll have to get a confirmation of the price moving above that resistance, right? So it's almost blocked. It is almost confirmed. Momentum also has climbed the bull zones on the medium term. You play this safely. There is a bearish divergence also there, but it could give good swing opportunities on the upside if the breakout is going to happen. So in Bank of India, Indian Railway Tour Corporation Limited weekly charts, what they are having possibility of good swing trades, long trades on the upside. This is the strategy on the Nifty. Look at the range that we're getting. It's 17,800 nearby levels and 18,500 nearby levels. It's a wide range, but risk reward is not that great. You'll have to exit as soon as you get a spike on either of the sides, and probably if profit is also reasonable. You have to add more lots depending on your capital and risk appetite. Right? What you're basically doing is selling the November 10th 17,850 put and 18,400 put, and then covering it with 17,450 of put and call, 18,700 call of the upcoming week, 17 the number. And that's a double dial calendar spread that you're seeing. If the spike happens, then also will benefit, and the range is good, but risk reward may not be that attractive. You'll have to enter exit early, and with the 1 or 2% target, and increase the capital size accordingly. That's the way of chart of the Nifty option strategy that you're seeing here. And moving on, let's just wrap up all that we have studied so far. We had talked about a lot of things, right? Starting from the price patterns to the momentum to the trend, the volatility, the open interest levels, and global commodities, institutional participation, weeks, and all of these things. Let's conclude. The view is moderate view for bullish view, moderate bullish for the next week also as well. Although there is a very risk of an indecisive banks that is there. That may be a calm before a storm. Is that storm on the upside or downside? We never know. But banks has to participate for the breakout to happen. Nifty has already broken out. It's given as confirmation of breakout, but would that turn out to be a fake breakout is something that the banks will decide for the next week or probably the week after that. But banks has been consolidating for 9 days now, doing nothing. Zigzag up down up down up down, basically maintaining its level above the 40,000. Is it going to break down? Is it going to break out and then eventually we are going to make an all-time high? Never know. But things are positive. The Fyers are buying, VIX is cooling off, open interest is bullish, momentum in price and trend and all these indicators are showing bullishness. Everything looks fine except the US market, which is kind of struggling to break out from the small reversal or the leaf rally that they've done the previous 2 weeks. It is now facing resistance in IT index, and Nasdaq is also weak. It has not even participated in the last week when the Dow was moving up. So you got to keep a close watch of these global markets. They're not in that great shape, given the fact that last week the Federal Reserve rates were also happening. Problems are great. Have your repo rate decision is set to come. Increase in the US Fed rate has happened. US inflation is keeps on, causing problems. Although positive news comes in here and there. Crude oil is again spiking up. Dollar is not yet cooling off. Rupee is in a very bad shape. So all these uncertainties are still there, but the VIX has cooled off. Right? VIX is always mean reverting nature, so anytime it can spike back in 1 or 2 days to the 20 levels. It doesn't take much time to spike back. So we have to be cautious the moment we are having a India VIX above the 20, stay out of the trade or conservative positions accordingly. But right now, with this current VIX, it's good to participate in the option trading. Keep a close watch on 16,500s, 37,000 levels on the Nifty in the bank in the downside, and 18,351 would be breaking of the new swing high, and 14,000 would be an all-time high level breaking, and then that would be the time when we can say a close of a week would only indicate that we are having a breakout for sure. Until then, it would be another hit to the resistance for making another swing low. Never know. So that's what we are. So always have your trading strategies with hedge portion so that you know what the value you may lose in the worst case scenario where you take the overnight risk. So use cash or pools and covered calls and all the strategy to get a rental incomes to protect your high quality long term investment stocks. If you're not aware of that, check the playlist. You will have videos on that. So that's my view, moderate view. But remember, banks have not decided yet whether to do it or not. So be cautious and play safe. I don't know if this video has helped you to frame a view for the market for the next week, and better trade plan for your trade in the next week. Then definitely hit the like button if you have not done that. Subscribe if you have not done that. Share with your friends if you have not done that. We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.